Good day and welcome to this question discussion on Chapter 7. This is regarding partnerships. The question that we're going to be dealing with today is question 7.18 in your question book, if you want to get that and keep it handy for the discussion. For any question, we read the required part, and this question consists of 3 separate sections. We will only be dealing with Section A and Section C for this question. In the required part for Section A, they ask us to prepare a distribution account and then the current accounts of the partners of Jakaranda Paint for the year ended 30 June 20.9. So if we get our framework sorted out for this question, we're going to draw up a distribution account. Now the distribution account is a temporary account where we account for the distribution of all the profits of the partnership to the partners. You will recall that a partnership is not a legal entity in its own right, and therefore we can't keep any profits in the partnership. That's why we distribute everything to the partners. Then we're going to be preparing the current account, and in this case we had 2 partners. We had the partner Jade and partner Lila. A current account is not an equity account, but it can either be classified as an asset or a liability. If the partnership owes the partners, that will be accounted for on the credit side, like a normal liability. And if the partner owes the partnership, that will be accounted for on the debit side of his or her current account as a debtor, an asset in other words. So we'll have to look for the balances for these accounts to determine whether this current account was classified as an asset or a liability in the books of this partnership. If we start reading the given information, they inform us that Jade and Lila are partners in Jakaranda Paint and share profits and losses according to their capital contributions. The profit sharing ratio can be provided to you in the partnership agreement. In the absence of that, we will fall back on capital contributions, and here they tell us to use the capital contributions. So we will apply these capital contribution balances in a minute to calculate the profit sharing ratio. The following information was obtained from the books of Jakaranda Paint on 30 June 20.9. They give us the 2 separate capital accounts for each partner, as well as the 2 current account balances for each of the partners. Both of them will also have a separate drawings account, and then they provided us with the profit or loss amount. Remember, this is a profit or loss calculated by applying all the income and expenses of the partnership. None of the income and expenses where a partner is a third party to the transaction will be included in the calculation of the profit or loss. This is for the entity separate from the owners. If we can apply the capital contributions, 120 for Jade out of the total capital contribution of 200,000, and the same then for Lila. Lila will have 80,000 out of the total capital contribution of the 200,000. That's simplified into the smallest fraction that we can apply, will give us a profit sharing ratio for Lila and Jade of 3 out of 5 for Jade and 2 out of 5 for Lila, using the capital contributions and calculating their profit sharing ratio. If we can now start earning marks by including these balances at the start of the reporting period, you will see that for Jade we had a debit balance on the 1st of July 20.8, a debit balance of 2,800. That means that the current account of Jade would have been classified as an asset at this point. The current account of Lila, we had an opening balance on the 1st of July on the credit side, meaning that the partnership owed this partner an amount at the end of the previous financial year of 6,500 Rand. Now we've included the balances of their current accounts. That's the only part that was required. So we can have a look at the additional information. On the 30th of June, partner Jade took old office furniture with a carrying amount of $850 for his own use. This transaction was not recorded. The depreciation on assets was calculated and recorded correctly. Whenever the owner withdraws, whether it's money, stationery, or any other assets, that will have an influence on the drawings account of the partner. So they tell us that Jade withdrew not only $64,350, but we also have to add to this another $850 that was withdrawn by the partner without accounting for it. This will influence the closing transfers of the drawings to the current accounts of the partners, which we will discuss later. In number 2, an amount of 11,440 Rand for the rent income was included in the profit or loss account. This amount represents rent received for 13-month period, and the 13-month period is from the 1st of August to the 31st of August 20.9. Our financial year end is 30 June 20.9, which implies that from end of June to the end of August, we've got 2 months of rent income that is included in the profit at the top there that does not adhere to the accrual concept at this point. So we need to take 2 of the 13 months of the 11,440, and that will give us 1,760 Rand, which is included in the profit for the year, the 136, but that was not earned by the entity yet. So that amount will have to be deducted from this profit, 1,760 Rand, before we can start distributing the profits to the partners. In number 3, they start to give us information about how this profit was distributed to the partners. So we can start in our distribution account on the credit side with the amount from the profit or loss account that is now distributable to the partners, either by means of stipulations in the partnership agreement or then in their profit sharing ratio. And this profit or loss amount is the 136,026 minus the 1,760, resulting in 134,266. The partnerships are allowed salaries of 5,000 Rand per month to Jade and 3,000 Rand per month to Lila. If we account for the salaries, once they accrue to the partners, we will debit the salary expense and credit the current accounts of the partners. Remember, whatever the partnership owes the partners will be entered on the credit side, and whatever is due by the partners to the partnership will be entered on the debit side. So we would have had an entry on the debit side for the salaries expense and then a corresponding credit in the current account of Jade for salaries. And for Jade, they told us that it's 5,000 Rand per month. So the 5,000 for the whole year will give us 60,000 Rand in salaries for Jade. Debit in salaries, credit in the current account. The same for Lila. Debit the salaries and credit the current account, 36,000 Rand. In the salaries account, we will now be sitting with a debit of 96,000. That debit in the expense account will have to be closed off at the end of the financial year. Closing transfers can either be to the trading profit or loss, or then in a case of a partnership, the distribution account. Distribution is everything according to the partnership agreement that was distributed to the partners. So the salaries account will be closed off at the end of the year. To the debit side of the distribution account, it is the 96,000 Rand. This is at the end of June, 20.9. Then they also mention that the partners will earn 5% interest per annum on their capital contributions and 5% per annum on the credit opening balances of their current accounts. So if we calculate the interest on their capital amounts, 5% on the 120,000 at the top, and 5% interest on capital on the 80,000. Interest on capital is like interest on an investment. The partners could have invested this money with the bank. That means that the partnership will owe the partner these amounts. Again, on the credit side of the current accounts, we're going to enter interest on capital. This is all at the end of the year. Interest on capital at 5% for Jade amounted to 6,000 Rand, and interest on capital for Lila amounted to 5% of his capital contribution of 4,000 Rand. Then they mentioned a 5% on the credit opening balances of current accounts. Now the only partner that had a credit balance was Lila of 6,500. So we're going to have to pay Lila the 5% on 80,000 on a 6,500 current account. So interest on current account for Lila will also be due to the partner on the credit side. So we're going to have an entry for interest on current accounts. And the interest on the current account for her amounted to 325, while interest on the current account for Jade is calculated as 8% per annum charged on the opening debit balances of current accounts. So because of that debit balance of 2,800, times 8%, this is interest that Jade will have to pay to the partnership. So that interest will be entered on the debit side of the current account. It's due by the partner to the partnership. Interest on the current account. 8% of the opening balance of 2,800 will give us 224. You will see that the partnership will have to pay more than what they receive. That will result in an expense on the partnership side. So the expense closed off to the distribution account will again result in a debit entry in the distribution account of the difference between the interest due to the partnership and the interest due by the partnership. So this is interest on current accounts. And the interest on capital accounts would also have been closed off to the distribution account. Then they mention in additional information number 5, all payments due to partners during the year were debited to their drawings accounts. So they accounted for any salaries, bonuses, interest, any withdrawals of cash or other assets entered in the drawings account, with the one adjustment from additional information number 1, and the remaining profit or loss is divided between the partners in their profit sharing ratio. If we now refer to our distribution account, on the credit side we put the profit according to the accrual concept, minus then the salaries of the partners, minus the interest on the current accounts and the interest on the capital accounts. At this point, our credits exceeded our debits, and we are left with a profit for distribution of 28,165 Rand. This distribution of profits must be made to the partners, and we give to the partners in their current accounts. So we will debit the distribution account with the current account of each partner. And remember, we calculated the profit sharing ratio according to their capital contribution. So Jade will get 3 out of the 5 of the profit, while Lila will only get 2 out of the 5. So 3 out of the 5 of the 28,000 will amount to 16,899, while 2 out of the 5 of the 28,000 will amount to 11,266. At the end of every financial year, our distribution account, our temporary account, must balance so that we can confirm that we've distributed all the profits to the partners, either by means of partnership agreement expenses or then in their profit sharing ratio. In the current accounts of the partners, we want to determine at the end of the financial year whether the partner owes the partnership or whether the partnership owes the partner. And for that reason, this is what they could take out of the partnership. Now we have to close off the drawings accounts to their T accounts so that we can see of this amount that was due to the partner, what have they already taken. So we're going to take the drawings of Jade, which is an adjusted amount, and the drawings of Lila, and close them off to the debit side of these current accounts. The drawings for Jade was the 65,200, and the drawings for Lila amounted to 55,000 Rand. Now we can balance these two accounts to determine whether we have an asset on the debit side or a liability at the end of the financial year. And for both of the partners, the partnership will end up owing the partner because we have a balance brought down on the credit side. This current account, profit distribution, will also be entered on the credit side. That comes from the distribution account. And the same will be done to the current account of Lila. We will give the distribution of the final profits on the credit side. Close off the drawings on the debit side and calculate our new balance. That is section A. This was the basic accounting entries for a partnership. Now, if we refer to section C of this question, you will see that the required part asks us to record all the transactions related to the admission of amber in the General Journal of Jakaranda Paint. Now, for the admission of a partner or any change in the composition of a partnership, there are certain steps that you have to follow. For the admission of a partner, we have 9 steps. Remember, these steps will not necessarily all be valid steps in the admission of a partner, but you have to consider all 10 of them. In the first instance, they tell us in the steps that we follow that we have to look for any outstanding transactions with partners. And if we can go through section C's given information, they tell us to use the following information from section A, given and calculated. Jade and Lila are partners in Jakaranda Paint and share profits and losses in the ratio of their capital contributions. That means that we're going to apply our old profit sharing ratio for Jade and Lila of 3 out of 5 and 2 out of 5 that we have already calculated. The balances of Jakaranda Paint at the 1st of July 20.9, they give us the capital accounts for each partner and the current accounts for each partner. Then they tell us in additional information number 1 that Amber is admitted as a partner to the partnership on the 1st of July 20.9. That means that there was no outstanding transactions because the date of the balances and the date of the admission was exactly the same. So we do not have any accounting entry for step number 1 in the process. In step number 2, they ask us to reverse any reserves. Reserves can be items like an asset replacement reserve or a revaluation reserve, which we all discussed in previous chapters. They will be classified as equity, and we can see in the balances there was no asset replacement reserve or revaluation reserve in this partnership. Therefore, there is no need for any adjustment in number 2. In step number 3, they ask us for admission of a partner. We need to look for any revaluation of assets and liabilities. Now, if you can recall the basic accounting equation, as soon as we have changes in the assets and liabilities, to keep the basic accounting equation in balance, we need a corresponding increase or decrease in an equity item. And the equity item that will be influenced in a partnership will be the capital accounts. Now, if the revaluation is done for the admission of a partner, that implies that the old partners have been slaving away to get to the new values of the assets. If we then change the value of the land, like in number 3, where they tell us that it was 50,000 more than the carrying amount. The same with the equipment and the trade debtors. As soon as we have changes in these assets and liabilities, the changes will only influence the old partners' capital accounts in the old profit sharing ratios. So for the revaluation of the land, they told us we had an increase in the valuation of land, an increase of 50,000. We can now credit the capital accounts of the old partners in the old profit sharing ratio. But because we have other changes in assets, we also have to deal with an 8,000 Rand decrease in the carrying amount of equipment. Instead of doing these as separate entries, we're going to do a combined journal entry to save us time and effort. So if we have a decrease in the equipment of 8,000 Rand, that will result in a credit in equipment of 8,000 Rand. Then they tell us that our trade debtors is estimated that the amount that will be received will be 2,000 Rand less than the outstanding balance. So we cannot decrease the debtor because this is a estimation. So instead of decreasing the debtor, we're going to increase our allowance for credit losses. That will result in the end in a decrease in debtors. For credit losses, and they give us that amount as 2,000 Rand. At this point, we can see that although assets increased with 50, it also decreased with 10,000 Rand, resulting in a debit of 40,000. That debit of 40,000 will require 2 credits in the capital accounts of the old partners in the old profit sharing ratio. So Jade and Lila will get in their old profit sharing ratio a distribution of the 40,000, which will amount to 24,000 for Jade and 16,000 Rand for Lila. Okay, so now we are back to our steps: outstanding transactions, reversal of reserves, and the revaluation of assets. Now, step number 4 is a calculation of goodwill. Remember, as soon as someone is willing to pay for a going concern, the inherent goodwill changes to acquired goodwill. And they tell us in additional information number 2, Amber will receive 1/4 share in the profits and the entity as a whole for a contribution of 75,000 Rand, including 4,000 Rand for his premium for the goodwill. So if his part of the goodwill is 4,000 Rand, that means that 1/4 of the goodwill amounts to 4,000 Rand. We're not interested in only 1/4. We are interested in the partnership as a whole. So if we take the 4,000 and we multiply it with 4, we get goodwill of 16,000. That 16,000 Rand was calculated by taking the given 4,000, which is only 1/4, and we multiply it with 4. There are other ways of calculating goodwill as well if it is not provided as a premium like this. So please refer to other questions so that you can get to the calculation of goodwill. In number 5, we have to now account for the goodwill. And the accounting for goodwill will increase my assets on the debit side. So I'm going to debit my goodwill account. And I'm going to credit once again the capital accounts of the old partners in the old profit sharing ratio. The new partner has not yet sacrificed anything, so any changes in the value of assets or liabilities will only influence the old partners. 16,000, that will give us 9,600 Rand for Jade and 6,400 Rand then for Lila. Okay, those are the steps that we had to follow before the admission of the new partner. Then if we now account for the admission of the partner in the general journal, admission of the partner, Amber gave us 75,000 Rand, so we debit the bank and we credit the capital account of the new partner, therefore creating a new profit sharing ratio as well. There we had the capital accounts of the old partners, and now we have a capital account for the new partner. In the last instance, in number 4 of the additional information, they tell us that no goodwill account must remain in the books of the entity after the admission of Amber. Now, after the admission, Amber has already done his part by contributing 75,000 Rand. So anything that happens after the admission of the partner will have to happen in the new profit sharing ratio. We do not have a new profit sharing ratio yet, so we'll have to calculate the new profit sharing ratio. If they told us that Amber will receive 1/4 share in the profits with his contribution and his premium for Goodwill, this 1/4 share will have to be sacrificed by the existing partners in some or other way. If we can do the mathematics for that, if we have the old profit sharing ratio for Jade and Lila, whatever Amber gains, 1/4, the other two partners will have to sacrifice. Now they can't both sacrifice the full 1/4 because then Amber will receive 2/4. So we now have to break up this 1/4 into certain portions. In the absence of a description of how the 1/4 will be sacrificed, we will sacrifice the quarter in the old profit sharing ratio. So we took 3 out of 5 of the 1/4 and 2 out of 5 of the 1/4 as a sacrifice by each of the partner. You know in mathematics that we first multiply before we can divide. So that resulted in this 20 as a denominator at the bottom. If we then have our final profit distribution, just make sure that all of these portions, the profit sharing, adds up to the bottom amount. So 9 plus 6 plus 5 will give me the 20. So that is my new profit sharing ratio. If they then told me after admission, no goodwill must be included in the books. If we added 16,000 at the start, now we'll have to take out the 16,000 on the credit side of the goodwill account, and that will influence the capital accounts of the new partners in the new profit sharing ratio. Everything before admission happens in the old ratio, after admission in the new ratio, and on admission we account for the new partner. I hope that you found this beneficial, and I hope to see you again later.